I really appreciate the questions that came after last week's conversations on the top three signs that you should convert to S Corp. And you'll get all the details of why I say these are the top three signs. All right. Now, I have another sign that I want to add to that list of three this week. All right. Now, I first said that, hey, it's time to pay yourself and pay others. A lot of people are going into business and you already have a job, or you're still working in corporate and this is not your only source of income, or your business is not your only source of income. Well, if you already are in a six-figure job and you're making over $100,000, you're probably already maxing out on employment taxes. In those cases, because your business is not your sole source of income, and you're already maxing out on employment taxes, you're probably hiring someone to run your business while you go to your day job. That's usually, S Corps are usually a good fit for those types of business owners. I have a couple of things that I do to analyze that, to make sure it's a good fit. Now, I'm giving you guys this is my opinion. I'm not saying go out and jump and be an S Corp and apply this to your business. You must consult with an accountant to make sure that this piece of advice applies to you, because a lot of the advice that we see on the internet does not apply to us. Just because it is advisable, and just because it is out there, it does not always mean that this piece of knowledge or advice is for you. So I do want to get out and say that, because I am, up to here just tired, exhausted, seeing this advice out here in the internet streets, and you guys are applying it to you like you can wear it. It's like, hey, you wear a size 11, but you're trying to wear a size 8 shoe, or you wear a size 11 and you're trying to wear a size 6 shoe. It's not a one size fit all, so make sure that you get with your advisor. All right, so at what point should you stop taking owner's draw and start taking payroll? Technically, Terrell, because Terrell asked the question, every S corporation and every C corporation, every corporation period, is expected by the IRS to have one employee. So when you leave from being an LLC to converting your LLC partnership or sole proprietorship to an S corporation, there should be one employee. And you should start running payroll for a minimum of, I usually start off with $1,000 a month. And then I also take an evaluation of, what are your bills? Like, what do you need to live? If you need, $3,000 a month to pay your mortgage and to live off of, maybe you should start with that as your base wage. That's if you have no other source of income in your business, because your business can at least support you paying your mortgage, etc. Otherwise, you wouldn't be in business. Or you take your person who's helping you, your admin assistant, make that person a VA. Whomever is working the most hours in your business initially, that person should be your first employee. All right, you want to make sure that you, at least if you're an S corporation or a C corporation, guys, you want to at least make sure that you have one employee and you're filing employment taxes, because that is the number one red flag and number one reason why S corporations and C corporations get audited, small ones. Because we have a S corporation or C corporation, we're filing income tax returns, but we've gone years and years and never filed a payroll tax return. Well, are you truly a corporation? Now, if you're a holding company, then that's a totally different thing. But if this is your only business and you're not tiered, meaning there's not a parent company and a sub company behind that, if your business is a sole business, then what you should have an employee. And that employee should be the person who's working the most hours. If that person is you and you're like, look, I can't afford to pay myself $100,000 salary, but I could at least pay myself a base salary of, let's say, $1,000 a month or $3,000 a month or $2,500 a month. Start somewhere, right? Even if it's just $1,000 a month, do that. File your payroll taxes so that at least you reduce your audit risk, and you're showing the government that, look, I recognize that I am a corporation and every corporation has at least one employee. I hope this is helping you guys and is blessing you guys. All right, so next question. I am acquiring a business that is an S corporation. This will be my first experience with an S corporation. Will you please explain exactly what it is and why a business would be an S corporation? Okay. An S corporation is merely a tax designation, okay? An LLC can be an S corporation. S corporation simply means that I'm a corporation, but my corporation will not be paying its own income taxes. So an S corporation is the form of a pass-through entity, all right? So when I say, when you incorporate your business, when you first go into business, if you never file with the Secretary of State, right, you are a sole proprietorship. That means that, you know, I'm in business, but I'm just not, well, you can register a sole proprietorship. Let me take that back. You can register a sole proprietorship, but if you want to legally protect yourself, you limit your liability and you become a limited liability corporation, which is what an LLC is. Or you become a limited liability partnership, which is what an LLP is. And you limit the liabilities of your business to your business's assets, right? You also let the IRS know that your business is a standalone entity in and of itself, and it will be, if it's more than one owner, it will be filing its own income tax return. It will not pay income taxes, and it will distribute the income pro rata share by percentage of ownership to the owners of the business. All right, now that's the first step. You protect yourself legally. Second step is of incorporation is you tell the IRS how you want to be taxed. Now, an S corporation is nothing more than a tax designation. You're saying, hey, I'm not limiting the liability of my corporation. My business is a corporation, and all of its liability is its liability. And it's not quite yet, as an S corporation, it's not quite yet ready to file its own taxes, but it is ready to stand alone legally. So that's number one, what an S corporation is. An S corporation is nothing more than a tax designation. You still don't pay income taxes as an S corporation because it is a pass-through entity. Just like a sole proprietorship is a pass-through entity, just like a limited liability corporation, LLC, is a pass-through, and an LLP partnership is a pass-through. Pass-through means that you pay no income taxes, and the income passes to the owners, shareholders, members to be taxed based on their percentage of ownership. So if you own 40% of the S corporation, you're going to receive, and you make $100,000 of net income, net taxable income, you're going to receive as a 40% owner, $40,000 of the income via a K-1 to be taxed on your personal income tax return. So if you acquire an S corporation, that's what's going to happen. Now, if you own 100% of the shares, 100% of the income is going to pass to you to be taxed on your personal taxes, okay? Why should a business be an S corporation? You should be an S corporation when, like I said before, if you're looking to raise capital, and you want to make sure that, and you're going to be bringing in equity partners in and out, an S corporation is better than a limited liability corporation in that instance. A S corporation also, in your instance, acquiring an S corporation, you acquiring the S corporation does not dissolve the business. Now, because when owners are added or leave the business and it's an S corporation, it does not effectively dissolve or kill the business. When you're an LLC or a partnership, when owners leave, let's say Sally and John and Bill owned the S corporation. If Bill left and it's just Sally and John, then that is a new LLC or new LLP partnership in the eyes of the government. And if they go and add 2 more partners, then the business dissolves again and it's a new partnership. So to prevent that from happening, you become an S corporation, and when you add equity partners in and out of the business, it doesn't dissolve your business in the eyes of the government. So that is why you would be an S corporation. And since you're in the business, because M&A is my background, I'm a mergers and acquisition accountant and specialist. Because you're buying a business and you're buying an S corporation, you also want to determine if the business you're purchasing, is it an asset purchase or a stock purchase? You got to be very well aware of how you're purchasing, because that also exposes you, depending on if it's an asset or a stock purchase, that exposes you to liabilities of the company that you're purchasing. So I would highly recommend that you consult with an accountant that understands transactions. Okay, don't go to your tax accountant, don't go to your general accountant to find this kind of stuff out, because all accountants are not made the same. All accounting transactions are not made the same. All numbers transactions are not the same. And let me just say this, okay, when you got cancer, right, just like you're in your business, right, or if you got sick and you had cancer, you wouldn't go to your general practitioner. Or if you had a heart problem, you wouldn't go to your general practitioner, you'd go to a heart surgeon, right? Or a heart doctor. With your business, it's the same thing. With accounting, you go to a tax accountant when you got tax problems. And you want to make sure that that person can deal with people with tax problems. If you're buying a business or you're selling a business or you're interested in buying a business, you want to consult with an accountant who's familiar with transactions. So in this case, I want to make sure that you know that what kind of purchase that you're doing. Is it a stock or asset purchase? And the liability that you could be subjecting yourself to depending on the type. All right, guys. That's all I got for y'all. Thank y'all for the questions. You know what? This is my wheelhouse. I am so excited to be here with you guys. I love to teach. I love the questions. Keep the questions coming. If there's anything here that I talked about and it raised some questions, put it in the comment section. I'll come back next week. I know this conversation of S Corps versus C Corps versus LLCs. I'm here for you guys. I love you guys. This is what I love to do. And I would love to work with any of you guys if you're looking for an accountant. If you want to work with us and you sign up for a consultation with me. So book a consultation with me. But until next time, y'all, don't forget to move your profit in the right direction. And that's I love you. Bye.